Hey there, everybody. It was a busy week of research. I'm going to focus first on the electric utilities east, and there is a new player in the mix, PSEG. Looking forward to digging into them a bit more. Come on, let's dive in and see what it's all about. A quick reminder, if you enjoy these discussions, please hit the like and subscribe to this channel. Hit that bell so you don't miss an episode. And please tell your friends so they can join in the conversation. So we're going to dive right in with Consolidated Edison. Remember, we are focused on the electric utilities east for this discussion. So all the companies will be electric companies from the east coast of the United States. Con Ed, or Ed, is yielding 3.5% on $86.63. All of this data is effective 16 August. Not qualified for cash flow or earnings per share, but they are a Div 0, so 17 years of increasing dividends per share. Here's their long-term trend. Some pretty good upward slope here on the cash flow, not so much on earnings per share. And the dividend is nice and smooth, not a lot of jigging and jagging. And here's the year-to-year changes. Okay, Dominion Energy ticker D. Wow, look at that, 4.9% on $75.22. Not qualified for cash flow or earnings per share, but they are also a Div 0. And here is their long-term trend. Now that's kind of interesting right in there. And here's the year-to-year changes. All right, Eversource Energy, ES. Their dividend yield is 2.8%, still filled with gold because it's greater than the 2.6 benchmark that I use. That's on $77.44. Not qualified for cash flow or earnings, but a Div 0. We expect our utility companies to pay out the dividends. Now here's what their long-term trend looks like. That's a lot of ups and downs and not a very good upward trajectory for the cash flow. The earnings are there, but man, that's just not, that's a lot of ups and downs there. And here's what that looks like on the year-to-year changes. Okay, NextEra Energy, NEE, their yield is 2.5%. Wow, that's on $211.40. Not qualified for cash flow or earnings, but they are also a Div 0. Well, let's see what their long-term trend looks like. Yeah, there's some good upward slopes on those lines. And here's the year-to-year changes. PPL Corp, PPL, 5.6%. Wow, that's on $29.59. Not qualified for cash flow or earnings. They are a Div 1. So they had 17 years of increasing dividends per share with the exception of this one flat year here, 10 to 11. And we allow one flat year in the dividends. Here's their long-term trend. Wow, that is just flat. I mean, there's just, look at that. You know, this, they're bouncing all around the $4 a share. They're bouncing around the $2 a share. At least the dividend line is nice and smooth. And then here's the new entry to this the new player on this field now, PS Enterprise Group, ticker PEG. Their yield is 3.4%. That's on $56.77. They're not qualified for cash flow or earnings. They're Div 1. And here is that flat year that they had in 10 to 11, just like PPL. And here is what their long-term trend looks like. That dividend line is relatively smooth. Cash flow and earnings per share, kind of upward trend there, but bouncing around a bit. And here's their year to year. All right, and then the final is a favorite of a lot of people, Southern Company. Their yield is 4.4% on $56.94. Not qualified for cash flow or earnings, but they are a Div 0. Here's their long-term trend. Yeah, it's a pretty good upward slope going there. Hard to complain about that. And here's their year-to-year. Let's lay them all out next to each other, see how they stack up. So first of all, we're going to look at these yields here. You got right at the top is PPL, and then Dominion. You can see on the bar chart how they're stacking up. NextEra, the most expensive of them, has the lowest yield at 2.5. So interesting spread on the yields there. And of course, I did a little math for you. I'm sure everybody gets it. Northeast and PPL. If you had $1,000 to invest, you're going to do better with PPL because the yield is better. So if you're after the income, you want to get the higher yield. So PPL would be your investment. All right, but let's look at these comps now. We're going to lay them all out here. So cash flow per share. You can see that right up here, this is NextEra Energy, and they're beating the pants off all the other contenders in cash flow per share. They're well above the group. Consolidated Edison, number 2, down here, but still in the mix. And we go to earnings per share. Again, we can see that NextEra is ahead of the pack. Everybody else mixing it up down here. And dividend per share, again, we see this is the actual dividend, not the yield. So you can see NextEra is paying a larger dollar value because it's a small percentage on a very large per share. And then then follow them is Dominion, and then Consolidated Edison, PPL down here. So I would like to hear what you all think about these electric utilities from the East Coast. Interesting mix. You're going to go with just the straight yield on this and go with PPL. We've shown some interesting things about PPL to pay attention to. Or do you like that nice strong signal that NextEra is sending, being at the top of the pack of everybody when you rack and stack cash flow, earnings, and dividends per share against each other? Love to hear what you say. Look forward to your comments down below. This was a really busy week. I've got lots more companies to talk about, so I may do a Wednesday drop. We'll see what happens because there's some good companies in the medical industry to talk about. So I might do a Wednesday drop this week. Y'all have a good one. We'll talk to you later. Bye now.